Strategy holds 845,000 Bitcoin. That is 4% of all Bitcoin that will ever exist. $64 billion in cost basis. The largest corporate Bitcoin treasury in history. But here is what most people miss. This is not a Bitcoin investment story. This is a financial engineering story. And as a CFO, I find it fascinating and terrifying in equal measure. Let me decode exactly how it works. This is the Faceless CFO. Today, I am breaking down the most complex corporate Bitcoin strategy in the world. In plain English, the flywheel, the capital stack, the numbers, the risks, and the lessons every CFO should take away. The origin story, August 2020. MicroStrategy, a mid-sized software company sitting on $500 million in cash. CEO Michael Saylor looks at that cash and says, "This is a melting ice cube. Inflation is eroding our purchasing power every single day. What if we put it into Bitcoin instead?" First purchase, 21,454 Bitcoin at an average price of $11,652 per coin. Total cost, $250 million. Fast forward to June 2026. That company, now rebranded simply as Strategy, holds 845,000 BTC. 112 purchases. Total cost basis, $64 billion. Average cost, $75,681 per coin. The company is Bitcoin. So how does a software company accumulate $64 billion worth of Bitcoin? The answer is a financial flywheel that every CFO should understand. Step 1. Issue equity or preferred shares when the stock trades above Bitcoin NAV. Strategy uses at-the-market offerings, selling shares directly into the open market, plus preferred stock products like STRC, STRD, STRK, and STRF. Step 2. Use the proceeds to buy Bitcoin. Step 3. BTC per share increases. This is called accretive dilution. More shares exist, but each share is backed by more Bitcoin than before. Step 4. Stock rises on higher BTC per share. Step 5. Repeat. The key metric is BTC yield. Strategy reports this weekly. Year-to-date in 2026, their BTC yield is 12.8%. That means Bitcoin per share grew 12.8% through accretive purchases alone, not from BTC price appreciation. In 2025, their BTC yield was 22.8%. This is pure financial engineering. Now the capital stack. This is where it gets sophisticated. Strategy does not just have one class of stock. They have built an entire product line of securities, each designed for a different type of investor. At the bottom, MSTR common stock, no dividend, maximum leverage to Bitcoin. This is for investors who want the most upside and are willing to take the most risk. Above that, STRD, junior preferred stock, 10% annual dividend. Gets paid before common shareholders but after everyone else. Then STRK, convertible preferred. 8% yield, can convert into common stock if conditions are met. Then STRC, middle preferred. 11.5% variable rate. The newest product, at the top, STRF, senior preferred. 10% yield, gets paid first in any liquidation scenario. Total preferred stock market cap, $13.16 billion. Annual dividend obligations, $1.71 billion. Covered by 31.4 years of Bitcoin reserves at current prices. That is the safety margin. Now the numbers that CFOs care about. MNAV. or modified net asset value. This measures how the stock trades relative to its Bitcoin holdings. Right now, Strategy trades at 0.68 times basic NAV. That means the market is valuing MSTR stock at a 32% discount to its Bitcoin. You can buy $1 of Bitcoin for 68 cents through the stock. But here is the CFO catch: enterprise value, which includes debt and preferred shares, is $63 billion. Bitcoin value is $54 billion. So, on an enterprise basis, the ratio is actually 1.17 times. The discount disappears when you account for the full capital structure. BTC per share, 0.002407. Bitcoin per share on a basic basis. At $63,000 per Bitcoin, each share is backed by about $153 of Bitcoin. Stock price, $124. The basic MNAV says discount. The diluted picture is more complex. Net leverage, only 11%. That is actually conservative for a company this aggressive. But amplification is 41%, meaning preferred shares amplify common equity exposure to Bitcoin significantly. The risks. What could break this machine? Risk 1. Bitcoin drops 50% and stays there. Preferred dividends of $1.7 billion per year still must be paid. Coverage drops from 31 years to roughly 15. Sustainable, but uncomfortable. Risk 2. MNAV collapses below cost basis. If the stock trades below Bitcoin NAV persistently, Strategy cannot issue equity accretively. The flywheel breaks. No new shares means no new Bitcoin. Risk 3. Preferred shareholders have priority over common. In any liquidation, STRF gets paid first, then STRC, then STRK, then STRD. Then whatever is left goes to MSTR holders. Common stock is at the bottom. Risk 4. The software business generates minimal revenue compared to the Bitcoin treasury. If you strip away the Bitcoin, this is a small software company with a massive capital structure. The software is not what drives the stock. Risk 5. Regulatory and tax risk. The corporate alternative minimum. Tax could create liability on unrealized Bitcoin gains. This is an evolving situation that could materially impact the model. 5 lessons every CFO should take from this. Lesson 1. Financial engineering can create enormous value, but only when the underlying asset cooperates. If Bitcoin had gone to zero, this story would be a cautionary tale, not a case study. Lesson 2. The flywheel works in both directions. Accretive in bull markets, dilutive in bear markets. Understand the cycle. Lesson 3. Transparency builds trust. Strategy publishes BTC holdings, yield, and MNAV weekly. Most companies hide their financial details. Radical transparency is a competitive advantage. Lesson 4. Capital structure is a weapon. Preferred shares, convertible notes, ATM offerings. These are tools every CFO should understand, even if you never use them at this scale. Lesson 5. You are not strategy, but understanding how they think. That makes you a significantly better CFO. Strategy Decoded, the largest corporate Bitcoin treasury in history. Built not by buying Bitcoin, but by engineering a financial machine that turns capital markets into Bitcoin acquisition. If this decoded something for you, hit subscribe. New videos every Tuesday and Friday. Drop a comment. Would you invest in MSTR stock or just buy Bitcoin directly? I read every comment. Next video. How one company burned $50 million in 18 months. A CFO breakdown. See you there.